Okay, this is a verbatim reading of IRS Publication 17, beginning on page 46. We are on Part 2, Income. These 8 chapters in the part discuss many kinds of income. They explain which income is taxed and which income is not taxed. See Part 3 for information on gains and losses. The report on Form 8949 and Schedule D of 1040. And for information on selling your home. Part 5. Wages, salaries, and other earnings. Reminder. Foreign income. If you are a U.S. citizen or resident alien, you must report income from sources outside the United States. Foreign income on your tax return unless it is exempt by U.S. law. This is true whether you reside inside or outside of the United States, and whether or not you receive a Form W-2 wage and tax statement or Form 1099 from the foreign payer. This applies to earned income such as wages and tips, as well as unearned income such as interest, dividends, capital gains, pensions, rent, and royalty. If you reside outside the United States, you may be able to exclude all or part of your foreign source income. For details, see Publication 54, Tax Guide for U.S. Citizens and Resident Aliens Abroad. Introduction. This chapter discusses compensation received for services as an employee, such as wages, salaries, and fringe benefits. The following topics are included: bonuses and awards, special rules for certain employees, sickness and injury benefits. This chapter explains what income is included in the employee's gross income and what is not included. Useful items. You may want to see Publications 463, Travel, Entertainment, Gift, and Car Expenses. Publication 525, Taxable and Non-Taxable Income. Publication 926, Household Employers Tax Guide. Publication 3920, Tax Relief for Victims of Terrorist Attacks. Employee Compensation. This section discusses various types of employee compensation, including fringe benefits, retirement plan contributions, stock options, and restricted property. Form W-2. If you are an employee, you should receive a Form W-2 from your employer showing how much the pay you receive for your services. Include your pay on line 7 of Form 1040 or 1040A or on line 1 of 1040EZ, even if you do not receive a W-2. In some instances, your employer is not required to give you a Form W-2. Your employer is not required to give you a Form W-2 if you perform household work in your employer's home for less than $1,900 in cash wages during the calendar year, and you have no federal income taxes withheld from your wages. Household work is work done in or around an employer's home. Some examples of workers who do household work are babysitters, caretakers, house cleaning workers, domestic workers, drivers, health aides, housekeepers, maids, nannies, private nurses, and yard workers. See Schedule H, Form 1040, Household Employment Tax, and its instructions, and Publication 926, Household Employers Tax Guide, for more information. If you perform services other than as an independent contractor and your employer did not withhold Social Security and Medicaid taxes from your pay, you must file Form 8919, Uncollected Social Security and Medicare Tax on Wages, with your Form 1040. See Form 8919 and its instructions for more information and how to calculate unreported wages and taxes and how to include them in your income tax return. Child care providers. If you provide child care either in the child's home or in your home or other place of business, the pay you receive must be included in your income. If you are not an employee, you are probably self-employed and must include payments for your services on Schedule C of Form 1040. profit or loss form from business, or Schedule C Easy Form 1040. Net profit from business. You generally are not an employee unless you are subject to the will and control of the person who employs you as to what you are to do and how you are to do it. Babysitting. If you are paid to babysit, even for relatives or neighborhood children, whether on a regular basis or only periodically, the rules for child care apply to you. Miscellaneous compensation. This section discusses different types of employee compensation, advanced commissions, and other earnings. If you receive advanced commissions or other amounts for services to be performed in the future and you are a cash method payer, you must include these amounts in your income in the year you receive them. If you repay unearned commissions or other amounts in the same year you receive them, reduce the amount included in your income by the repayment. If you repay them in a later tax year, you can deduct the repayment as an itemized deduction on your Schedule A, Form 1040. Or you may be able to take a credit for that year. See repayments in Chapter 12. Allowance and reimbursements. If you receive travel, transportation, or other business expense allowances or reimbursements from your employer, see Publication 463. If you are reimbursed for moving expenses, see Publication 521, Moving Expenses. Back pay awards. If you receive an amount in payment of a settlement or judgment for back pay, you must include the amount of payment in your income. This includes payments made to you for damages, unpaid life insurance premiums, and unpaid health insurance premiums. They should be reported to you by your employer on Form W-2. Bonuses and awards. If you receive bonuses or awards, cash, goods, services, from your employer, you must include its value in your income. However, if your employer merely promises to pay you a bonus or award at some future time, it is not taxable until you receive it and it is made available to you. Employee Achievement Award. If you receive tangible personal property other than cash, a gift certificate, or equivalent item, as an award for length of service or safety achievement, you generally can exclude its value from your income. The amount you can exclude is limited to your employer's cost and cannot be more than $1,600 for qualified plan awards or $400 for non-qualified plan awards for all such awards you receive during the year. Your employer can tell you whether your award is a qualified plan award. Your employer must make the award as part of a meaningful presentation under conditions and circumstances that do not create a significant likelihood of it being disguised as pay. However, the exclusion does not apply to the following awards. A length of service award, if you receive it for less than 5 years of service, or if you receive another length of service award during the previous 4 years. A safety achievement award, if you are a manager, administrator, clerical employee, or other professional employee, or if more than 10% of eligible employees previously received safety achievements awards during the year. Example: Ben Green received 3 employee achievement awards during the year. A non-qualifying plan award of a watch valued at $250, 2 qualified plan awards of a stereo valued at $1,000, and a set of golf clubs valued at $500. Assuming the reimbursements for qualified plans were otherwise satisfied, each award by itself would be excluded from income. However, because the $1,750 total value of the award is more than the $1,600, Ben must include $150, which is $1,750 minus $1,600 in his income. Differential wage payment. This is any payment made to you by the employer for a period during which you are, for any period of more than 30 days, an active member of the uniformed services and represents all or a portion of the wages you would have received from the employer during that period. These payments are treated as wages and are subject to income tax, but not to FICA or FUTA taxes. The payments are reported as wages on Form W-2. Government cost of living allowances. Most payments received by U.S. government civilian employees for working abroad are taxable. However, certain cost of living allowances are tax-free. Publication 516, U.S. government civilian employees stationed abroad, explains the tax treatment and allowances, differentials, and other special pay you receive for employment abroad. Non-qualified deferred compensation plans. Your employer may report to you the total amount of deferrals for the year under a non-qualified deferred compensation plan on Form W-2. Box 12 using code Y. This amount is not included in your net income, in your income. However, if at any time during the tax year your plan fails to meet certain requirements or is not operated under those requirements, all amounts deferred under your plan for the tax year and all preceding tax years to the extent vested and not previously included in income are included in your income for the current year. This amount is included in your wages shown on Form W-2 Box 1. It is also shown on Form W-2 Box 12 using code Z. Note received for services. If your employer gives you a secured note as payment for your services, you must include the fair market value, usually the discount value, of the note in your income for the year you receive it. When you later receive payments on the note, a proportionate part of each payment is the recovery of the fair market value you previously included in your income. Do not include that part again in your income. Include the rest of the payment in your income in the year of payment. If your employer gives you a non-negotiable unsecured note as payment for your services, payments on the note that are credited toward the principal amount of the note are compensation income when you receive them. Severance pay. If you receive a severance payment with your employment, when your employment with your employer ends or is terminated, you must include that amount in your income. Accrued leave payment. If you are a federal employee and receive lump sum payment for accrued annual leave when you retire or resign, this amount will be included as wages on your Form W-2. If you resign from one agency and are re-employed by another agency, you may have to repay part of your lump sum annual payment to the set. You may have to repay part of your lump sum annual leave payment to the second agency. You can reduce gross wages to the amount you were paid in the same tax year in which you received it. Attach to your tax return a copy or receipt of the statement given to you by your agency you were paid to explain the difference between your wages on the return and the wages on your Forms W-2. Outplacement services. If you chose to accept a reduced amount of severance pay so that you can receive outplacement services such as training in resume writing or interview techniques, you must include the unreduced amount of severance pay in income. However, you can deduct the value of these outplacement services up to the difference between the severance pay included in the income and the amount you actually received as a miscellaneous deduction, subject to the 2% adjusted gross income limit on Schedule A, Form 1040. Sick pay. Pay you receive from your employer while you are sick or injured as part of your salary or wages. In addition, you must include your income sick pay benefits received from any of the following payers: a welfare fund, state sickness or disability fund, an association of employers or employees, an insurance company if your employer paid for the plan. However, if you paid the premiums on the accident or health insurance policy yourself, the benefits you receive under the policy are not taxable. For more information, see publication 525. Social Security and Medicare taxes paid by employer. If you and your employer have an agreement that your employer pays your Social Security and Medicare taxes without deducting them from your gross wages, you must report the amount of tax paid for you as taxable wages on your tax return. The payment also is treated as wages for figuring your Social Security and Medicare taxes and your Social Security and Medicare benefits. However, these payments are not treated as Social Security and Medicare wages if you are a household worker or a farm worker. Stock appreciation rights. Do not include a stock appreciation right granted by your employer in income until you exercise or use the right. When you can use the right, you are generally entitled to a cash payment equal to the fair market value of the corporation's stock on the date of use minus the fair market value on the date your right was granted. You include the cash payment in your income in the year you want to use the right. We will continue next time with fringe benefits.